Hey guys, welcome back. In this video, I'm going to teach you how multi-time frame analysis is done. Just an overview because there is a lot of other things we need to learn to finally give you the complete structure of how you enter a trade. Right now, in this video, what I'm going to teach you is mainly how multi-time frame is used to get a bias and also how different time frames are used to take an entry. For example, swing traders use different time frames to analyze their bias, in which direction they are going to take a trade. Maybe they want to enter a buy during the week, or maybe they want to enter a sell. Similarly, scalp traders also use different time frames. They can't rely on higher time frames because they want to trade in the moment. In short, in this video, we are going to understand the uses of different time frames and how this analysis is done, how we capture the bias, and how we take an entry, what kind of time frame we use to take an entry. So let's begin. You see, we have AUD USD open in this chart, and if you see right now, the market looks like it's bullish. But if we just zoom out a little, we see the structure says something else. And if we zoom out a little more, now it's completely a different picture. So why I'm showing you the charts this way? It's because you need to understand how you view the candles. Most of the people, what they do is they just see this kind of perspective, but it's not enough. You need to fit enough candles where all the candles are clearly visible and you are able to analyze the chart. So right now my this tab is very big and I don't need this much size. So I just moved it to the right. Now let's have a clear picture. So the trend has been that the market has been going down for a very long time. And if you see, I can easily create a trend line. If you have watched the previous video, I can easily create a trend line right here. And also, I can also create a trend line on this pair. We have a little breakout, and then the trend line kind of shifted. Right now, the market, what it's doing is it's not moving as smooth as it was moving in these places. Right now, it is consolidating more. And if we see it right here, the market is approaching the recent, like the previous high, and this is weekly time frames. Right now, in the current time frame, if you see, the market is bearish, but we have a resistance right around these areas, and then we have this high. So at this point, weekly, we have this information. We can draw our lines and everything. For example, let's do it. Let's do this. So we have our first resistance right here. We do this. Then we have our second best resistance right here. We can try if we can mark this. I think there are not so many touches on this level exactly. We are almost touching here, like the candle closed a little above, but it's fine. Then we have two touches right here, then we have rejections from here. So this is a really good area. Now, these are weekly support lines, so I don't have it marked, like I don't have it in a template. What I'll do is I'll just, okay, I have it in the template. I'll just mark them as weekly SR. These are your weekly resistance lines right now. We can also create the support lines if we want. But anyway, we don't need it right now. For the sake of this video, let's just understand these are the resistance levels. And now what we do is we shift to a lower time frame. So this is for swing traders mainly. As I am a swing trader, I can teach you that. I can do on other time frames as well. It's done similarly, very similarly. The only thing is swing traders are in the trade for a very long period. Maybe it can take a week or sometimes 2 weeks. Me especially, I don't trade for more than 5 6 days. I like my trades to be short, like 3 days or something like that. But still, it's I am a part of swing trading system. So this is how it's done. Now on the daily time frame, let's look at how the market is looking. You see, we have clear structures right at our resistance lines. For example, right here, we have clear structure and many more. Previously, we could only see few touches on these lines. But right now, one, two, three, four, five, almost six, and then we have many more. So this is a really good resistance area. On the other hand, this one, we see one, two, three, four. This is also good, but this one is much better. So what do we expect when the price comes here? We will see a rejection. And imagine These are daily candles, and what we do is we trade on a time frame which is lower than that, right? We take entries on a lower time frame. So what kind of entry we will look at? We can look at the counter trades. Even though the market is bullish, what we want the market to change structure on the lower time frame, and then we enter a short position right here. Now let's discuss more. For example, this area is on the daily time frame another resistance line, right? Exactly this. Look at this. There is so much structure happening right here. So if the market has to break this, currently the market is not consolidating, which also means the market can easily reverse. When you see the market moving very smooth without consolidations, that means it has to find liquidity somewhere, right? It can't just keep moving. The buyers can't just keep pushing the chart unless there is a lot of buyers there already existing. So we don't know what can happen. There might be a lot of buyers, but we have to understand the picture that when the candles are moving very fast towards resistance, we can see a very easy reversal. Okay. Now we have a daily resistance line. Let's call it daily SR. So if you want a video where I set up like I can show you how I set up my charts, specifically how to create these templates and anything else, how do you add EMAs, indicators, everything, how to set up your trading view, you can just comment and I'll create a video for you. If you, I mean, I don't know if you guys want that. It's easily available over the internet how to do this stuff. But if you want a simple short video over how I set up my chart, what kind of pairs to add, just let me know in the comments. Now we have a daily resistance line back here. And what we want is if price wants to break this, you will want the price action to go up, retest, and then move up. We can enter a trade right here itself. But let's see what is currently happening. So we have daily resistance mark now. We have weekly resistance mark. Now let's move to 4 hour time frame. Understand this as well. Daily right here is bullish, not bearish, even though you see the global structures like this. But we can't have a structure starting here and ending here. We can see this is a lower high. First, it was a higher high, and then what happened is when the structure broke down, broke this level, it became a lower high, and this one is a lower low. Now, this is a lower high, this one is a lower low. Now, this is a lower high, this one is a lower low, right? I hope I'm clear. This one is a lower high, this one is a lower low, this is a lower high, and this one is a lower low. Now, last lower low was this, and lower high was this. When the market broke this structure, this became higher high and this became higher low. Now the trend is bullish on the daily. But let's switch it back to weekly. We can see the structure was right here. So of course, this also weekly, we can see the two time frames are in confluence. Weekly is bullish, daily is bullish. How weekly is bullish? We can see lower high, we can see lower low, we can see lower high, we can see lower low. And now we have a higher high, and now this becomes a higher low, right? This is the lowest point. Market broke here. Both the time frames are bullish. Now let's see 4 hour structure. Even 4 hour structure is bullish. Now this is really amazing because you can see like we I don't even need to do that lower high and higher high because the market is clearly visibly bullish. So we have a easy confluence of three time frames are in sync. They want us to, like, if you want to take a trade, you would take a buy trade, but we still have to understand how resistance and everything works because now we saw that daily can easily reject from right here. So we need to be understanding and acceptable over what kind of conditions and trades can play right at this position. We can see history on the daily candles when the market came from down right from around this position, came up and rejected right here and then went up, right? So would you want to be in a cell which will go here Or would you want to be in a buy from around these places, and that can easily like someday break this and go up? Okay. But the thing is, if you buy at these places, you are going to hit resistance very soon. You can see there are multiple times the candles have rejected from right this area. So that's the thing. What we do is either you can enter a sell here, you can't enter a buy to expect that this is going to break the resistance. Even though it looks good and the risk to reward might look good, but the probability says otherwise. We can't expect that kind of trade. So what we expect is a sell right here. And when do we expect a buy? When the market goes up on higher time frames like 4 hour, not the weekly and the daily, on 4 hour, and then gives us more structure towards the bullish side. Only then we look for entry. We don't look for entry just because the candles are just pushing on that side. We want to market to break structure and then we enter the trade. So in short, right here, we have a bias now because we saw the chart, what's happening, what the candles do when the prices are here. It consolidates a lot. And of course, then we can't go bullish. That's one of the simplest thing. So what we do is we look for sell. We look for sell around these places. Now again, we move to different time frame. Now on different time frame, what we can do is first we need to find out what kind of support we have. Let's move to daily and weekly again and see we have different support or resistance areas, like more around it, so that we can create a zone and understand when there is a break of structure around these lines, then we can enter a sell or buy trade. So weekly, we see straight one candle going up, one candle going down, one candle going up, one candle going down. Like all these candles have reacted the same way. So we don't have anything on weekly to create a zone. But on daily, we have something like this, right? Uh, we see the wicks right here, and then we have this as well. And on these lines, we have a lot of wicks, mainly liquidity taken from right this place. And then we can see we have a resistance, we have a support, and this can become our zone. And there are multiple touches right here. So what we want is now we can make a plan. I hope you're getting all of this. If you are not, let me know. I'll create another video for you. But just let me know whether you are understanding all of this stuff or not. This is your another daily SR line. Now what we do is on the 4 hour, we simply have to wait and let prices reject. Don't enter on the first breakout. Okay. Never enter on the first breakout. What you want to see is if this is a strong resistance level, which we have seen a lot of candle rejections, the more times it rejects, the more stronger it gets. So now when we see a candle going up, we will not enter any trade, even though it goes all around like it is reaching this place. We don't want to enter that trade until we see structure. So what do we want to see? We see something like this. Okay. Now if we want to enter a sell, so we saw that daily SR is something like this, and of course now the sell won't be a good thing to do. The sell right here is not going to give us risk to reward. So eventually we are back at the buy. Our initial analysis didn't give us the right bias because the zone was not created. Now when we have the zone, things have changed. Now we have more detail, more information about the charts. So what we want to see is we want to see on the 4 hour time frame for the price to give some structure, reject from these places, create a low, like liquidate from below the support or resistance line, support line mainly, liquidate from area around here, and then give a break of structure. And then on smaller time frames, what we do is we look for a small structure, let it consolidate around here, something like this, and then let the price go up. Now these are on. So right now we used daily and weekly time frames to understand what we want to trade, right? What should be our bias and what kind of entry we are looking for. But on smaller time frames like 4 hour, 2 hour, 1 hour, and 30 minutes, we look for structures. and each time we use different time frames. For example, 4 hour has done this. Okay, so we are clear, 4 hour is almost done with the structures. Now we see that there is a breakout. 4 hour closed around here rather than just giving a wick. So when you see just a wick, it might be a false breakout. But if 4 hour has closed around here, what you do is you go on to a smaller time frame, which is like 30 minute or 1 hour, and then wait for a retest of this area, a retest of area, and based on candlestick patterns, you take a buy. So this is how different time frames are used to enter the trade. Mostly swing traders use 1 hour time frame or 2 hour time frame to take an entry. Like I would see an engulfing pattern on the 1 hour, only then take an entry. For example, look at this. On 1 hour, this candle is so big. On 1 hour, this candle is so big, it's covering, eating so many candles. It has engulfed a lot of candles actually, and the momentum was really nice. And we are still seeing the candles going in the upward direction. This is a really good engulfing candle, but it's not necessary that we would have taken an entry right here because we don't know whether it's a support zone, resistance zone. We haven't marked. Yeah, it's kind of a resistance zone if we see it now, but this is how you take an entry. You see a rejection plus a really good engulfing candle, you could take an entry right here, and pray for 1:2. Now, now we covered how we use 1 hour time frame and 4 hour time frame to see structures and everything. So all these lower time frames after the daily is mainly for structure. 4 hours sometimes can be used to create support and resistance. For example, on USD JPY, we can see clear structures on the 4 hour time frame compared to the daily ones. I'll show you the daily candles. Yeah. So daily have a lot of rejections on these lines, but to make this line accurate, I have to shift on 4 hour time frame. Look at this, and maybe this to cover as many lines I want. And if you see, this is much better. I don't know why this line was a little below, but now it looks nicer. So many wicks from this area, and the structures are very clean. It's like resistance, support, resistance, support. That's the thing. That's the kind of thing we are looking for. Now, now I guess I have covered all the time frames. The only thing we left to cover is how different type of traders use different time frames. For example, swing traders use time frames like monthly, weekly, daily to analyze the bias. I don't use monthly because I don't believe in monthly. The thing with monthly is uh, I don't think like there are so many fundamentals changing these days. Like there is news every day and the fundamentals shift a lot. So I don't believe in monthly, but weekly I do understand how the currency is moving toward the year. Monthly is like a very big thing. Each month, like each candle showing 4 weeks is too much for me. And I don't want to look at that resistance levels and everything. Weekly is fine for me. Now, swing traders use weekly, daily to sometimes I also use 4 hour to understand the bias of what kind of trade I want to be in. And we use for entry 2 hour, 1 hour, and 30 minutes. 30 minutes is on the least side. We rarely use 30 minutes, but to get a tight entry, we do use 30 minutes, but I won't suggest that because as a beginner, 30 minutes can fake you out a lot. So you might enter trades that would end up being a doji, right? Instead of an engulfing candle. So understand that 30 minute is not that safe. 1 hour is much better. Now, a day trader would look at time frames like daily time frame, 4 hour, and sometimes 2 hour. They also look at 1 hour. These time frames for bias, and for entry they use 15 minutes, 30 minutes, 1 hour time frames. Okay. Now scalp traders they mainly use 15 and 30 minutes for entry, and for bias they use 1 hour, 4 hour, and daily time frame as well. The main thing is what they do is they currently want to be in the moment. So the majority of their trades rely on the shorter time frames like 4 hour and 1 hour. Daily is just to understand that they have a resistance, they have a support somewhere around here. They need to know where they are in the trade. So that's scalpers. Now I have tried scalping and I don't understand it so much because uh, as per the statistics I have previously told that a lot of scalpers blow their accounts. Like majority of the accounts blown in the prop firms are by scalpers and not swing traders. Swing traders actually are the most successful traders in the prop firm space. It's the statistics and it is said by I had seen this podcast from Titans of Tomorrow, and there was this Fiverr's CEO I think who shared this information, and I found it real because I have been in the community of forex traders and I do know a lot of scalpers, risking a lot of trades, and every day they I see a account blown. So, and compared to the swing traders community, I don't see that much. In fact, I see a lot of payouts on the swing traders community. And it's mainly because there's one more thing. Swing trading teaches you psychology and patience. Mainly the patience. Patience is something which is very important in trading. Scalp traders, they don't do that. They don't have that so much because they close their trades in 1 hour and it is so fast that if stop loss is hit and they have a correction to their trades, they might just revenge trade without even thinking. To understand this, scalping is dangerous. If it's your choice, if you want to do that and if you like it and if you think you are successful at it and you or maybe you want to give it a try, you can do that. It's your choice. Now, I think in the next video we'll continue on maybe support resistance lines. I'll have to look. I do have a whole list ready for you guys. I am doing everything in a structure. So make sure now you subscribe and also check all my weekly analysis videos. It's very important. It's consider it as an educational content because it will show you how I think what the market is about to do and how I predict different type of scenarios, right? So do check that and join me on Telegram. I do give midweek updates on Telegram and follow me on Instagram. Send me a hi if you want to talk to me. If you have any doubts or anything, you can just connect with me on Instagram. Until next time, thank you for watching.